Hello, I am Suhaib and I am working in Trisektor as executive engineer. We would be discussing the market features of Pakistan, Afghanistan, Bahrain, Kuwait, Oman, Qatar, KSA and UAE. Now first of all, Pakistan. Despite a faltering economy and speculation that the mobile market was saturating, Pakistan still managed to grow its mobile subscriber numbers in 2009 and again in 2010, reaching 100 million subscribers, just over 60% penetration by the middle of 2010. Growth in the mobile subscribers had slowed to an annual rate of 8% in 2009 and slowed even further in 2010 to an estimated 5%, modest indeed compared with the earlier boom years. Importantly, the mobile sector was continuing to grow in the face of a range of challenges. The deregulated market structure was certainly working well in the mobile segment of the market, with the five operators competing vigorously for the market share. Growth in the country's fixed line market remained sluggish. Fixed teledensity stood at less than 4% into 2010, with the numbers expected to only edge up slightly in the short term. One positive factor in the emerging fixed market has been the success of wireless local loop technology, which was supporting around 42% of all fixed subscribers by the early 2010. Whilst broadband internet penetration still remained low in relative terms in Pakistan, penetration of 0.5% by mid-2010. 2009-10 had witnessed a continuation of the strong surge in broadband services that started in 2007 and looked set to continue. Afghanistan. Afghanistan's mobile market continued on its positive growth path in 2009 with an annual growth rate of more than 30% coming into 2010. With mobile penetration fast approaching 50% by the mid-2010, the mobile market has been demonstrating considerable resilience in what has been a most difficult environment. The country's mobile operators continued to provide healthy and energetic competition in the mobile market, with all operators being well represented in the terms of market share. The country's internet market appears to be growing, with a major surge in the internet users reported in 2009 and the likelihood of this continuing in through 2010. On a broader front, however, the ongoing political and civil unrest will continue to be of a concern to the country and its people, with any deterioration in the situation certainly having an impact on the telecom sector. Bahrain. Batelco shares the fixed line market with competing operators providing international calling services using international direct dial, carrier pre-selection or prepaid calling cards. Introduction of number portability and commercially available unbundled services during 2011 has set the stage for tougher competition. In the mobile market, Batelco and a subsidiary of Zain of Kuwait compete with recent market entrant Viva Bahrain, which is owned by SJC of Saudi Arabia. As in other Gulf country markets, mobile penetration is at stratospheric heights. The other high expect markets, however, the population turnover gives room for growth. Future growth opportunities include the high population proportion of prepaid users and relatively low mobile broadband penetration levels. Competition accelerated in the mobile broadband market with the launch of WiMAX services by two alternative operators. Mobile operators later launched competing mobile broadband services, with competition expected to intensify going into 2012 as mobile operators increasingly focus on mobile broadband. This infrastructure-led competition has led to wireless accounting for the majority of broadband connections. Kuwait. Kuwait's telecom industry is something of an anachronism in the region due to lack of liberalization of the market. Not only does Kuwait not have an independent regulator, the Ministry of Communications is both the regulatory entity and also the operating entity for fixed line services. A further problem with the lack of independence and corporatization in the fixed line sector is a lack of available information on the sector. Competition does exist in the internet provision sector with four major ISPs, but again it is limited. Kuwait's mobile sector presents a different picture to its fixed line sectors. For many years, two very strong operators have shared a comfortable duopoly. They have enjoyed high tariffs in their home market and have used this base to extend internationally. Oman. Oman had 1.487 million 3G subscribers at the end of 2010, equivalent to 40.5% of the entire mobile customer base. Meanwhile, in the fourth quarter of 2010, the mobile subscriber market grew by just 0.8% according to the regulator. This was one of the slowest growth quarters ever recorded for Oman's mobile market. Incumbent operator Omantel had 156,000 mobile broadband subscribers on its network at the end of September 2010. Considering that alternative operator Navras introduced its mobile broadband offering before Omantel, Navras is understood to have an even higher number of mobile broadband subscribers on its network. Oman had 388,000 mobile broadband subscribers at the end of 2010. This figure was equivalent to 89.5% of the entire broadband market. Accounting for fixed and mobile broadband subscribers, Oman had a penetration rate of more than 15% at the end of 2010. Expected is the growth of mobile broadband services to contribute to weaker growth in demand for fixed broadband alternatives. The launch of WiMAX-based broadband services by the Navras network increased the competitiveness of the fixed broadband sector and should help stimulate further growth. Qatar. High penetration rates for mobile and fixed line telecoms and for broadband internet services. Broadband subscriber numbers are high. QTEL has begun building an FTTH national broadband network. Business applications and triple play, which is voice, ADSL, IPTV services being offered to the customers. Second operator Vodafone has acquired an 18% share of the mobile market less than a year after launch. KSA. Intense competition in the mobile market with all regional players involved. Mobile broadband and WiMAX broadband subscribers exceed the number of ADSL subscribers. Fixed line penetration has remained steady for some years rather than falling as it has in some other countries in the region. Internet user penetration is nearly 40%, but DSL broadband subscriber penetration is only around 5%. However, the number of DSL subscribers doubled in the 2 years to end 2010. STC started work on a FTTH network in early 2009. Mobily and Athi Telecom are planning to make extensive use of WiMAX. Mobily had coverage of 20 cities by early 2010. Mobile subscribers have grown rapidly in the competitive market and penetration rates have now reached 175%. UAE. Etisalat is investing in an FTTH network. Etisalat has completed the FTTH rollout for 85% of the households in Abu Dhabi, claiming that the UAE's capital will be the first in the world to be covered by the fiber, and completion of the entire national network is expected by 2011. The UAE has sky-high mobile penetration over 200%, internet subscriber penetration around 30%. Despite this, the UAE still has a surprisingly high number of dial-up subscribers, in 2009 constituting over 50% of all internet subscribers. Now let's look at the gross domestic product of all these countries. Pakistan. GDP per capita is $2,500. Agriculture is constituting 21.8%, industry 23.6%, services 54.6%. Afghanistan. GDP per capita is $900 with agriculture 31.6%, industry 26.3%, services 42.1%. Bahrain. GDP per capita is $4,300, that is more than $40,000. Agriculture 0.5%, industry 57.3%, services 42.2%. Kuwait, around $50,000, to be exact $48,900 US dollars. Agriculture 0.3%, industry 48%, services 51.7%. Oman, $25,600, agriculture 1.6%, industry 51%, services 47.5%. Qatar. GDP per capita is more than 1 lakh, $179,000. Agriculture constituting 0.1%, industry 69.8%, services 30.1%. KSA $24,200, agriculture 2.6%, industry 61.8%, services 35.7%. UAE almost $50,000, to be exact $4,960, agriculture 0.9%, industry 53%, services 46.1%. Do contact us at our following address. Thanks for listening.